Andrew, let's talk about emerging markets. We've talked about Europe now. Emerging markets. Where do you see the opportunities when it comes to fixed income in emerging markets?
So the best opportunities we think is in FX, actually. So when you look at the relative value across EM space, we like being long EM currencies. You know, in terms of the fundamentals, the growth outlook looks quite good. You're not seeing a lot of imbalances in the major EM countries. You know, there's some good political news in South Africa. So one of our favorite trades is going to be earning income, earning carry by being long a broad basket of EM FX.
So then what did you make of the reaction then when you wind up having a stronger dollar? The EM was very sensitive. If we do wind up reversing this weaker dollar trend, do you need to rethink that theory, or you think it sustains?
So, I mean, it's a minor stress test for EM, but the equity volatility we saw earlier in the year, EM performed quite well. We've had the gradual rise, faster this year, but a rise since last September in terms of real and nominal rates, and EMFX, overall has performed pretty well. So unless you get big surprises, for example, a surprise on U.S. inflation would be difficult. With the baseline view, we think EMFX looks pretty good, and more generally, the outlook for EM looks pretty reasonable given the underlying fundamentals.
And what about bonds when it comes to EM? Because, as you know, the spreads have really narrowed quite a bit with developed markets. Does that mean that they're fully priced, that there's not as much of an opportunity to buy into EM bonds at this point?
I think on the hard currency side, the dollar side, it looks reasonably tight. Yes, that you can find opportunities, but it looks reasonably tight. On the local rate side, where you have the embedded FX exposure, you can find select opportunities there. Overall, I think we think that Mexico, for example, looks pretty reasonable. But I'd say we think the best place to be, the relative cheapness in the asset class, is to be long the FX risk primarily.